Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin with, the Australian dollar is expected to continue to hold in its bear phase and remain focused on the suggested objective of 76.5 to 77.20 before the market is likely to reassess any new trend. Looking ahead of today, we have the announcement of the RBA monetary policy meeting and probably another balanced statement from the Reserve Bank of Australia with no expected clear policy guidance. Rates currently hold at the historic lows of 1.5%, and it is anticipated that the RBA Governor Phil Lowe may reiterate on growth, inflation and wages, which in turn shouldn't affect the Australian bearish direction. Measuring the quality of the daily technical studies, they still remain negative. Therefore, any advances should find resistance at 78.65 and firm above at 79.15. And as I mentioned, I am looking for a further down move with the immediate targets in at 77.90 to 77.55. The euro weakness has once again been contributed by the strong US dollar, as it now breaks above the 93 handle and is currently challenging the highs around late August of 93.50. Now, last week, Trump proposed a major overhaul of the US tax code, which includes reducing the corporate tax rate from 35% to 20%, as well as the 25% tax rate for smaller businesses, such as partnerships. At present, the tax plan is still a little sketchy on details, including how the tax plan would be paid for. Now, looking at the dollar index, if we can witness a sustainable break at the moment above 93.40, which is where it's trading at the moment, then we could look for a substantial leap up towards 96 to 97. Now, for some of us that don't know, the US dollar index measures the greenback strength against a trade-weighted basket of 6 major currencies, and the euro is weighted at 57.6. So if my view of reaching the 96-97 area is the fact that euro will take out this level of 116.85 and look down towards the region of 116.30 to 115.40. Now, this week we have a large data impact, starting with a string of Fed governors to speak, and along with Janet Yellen, who will be speaking at an event in St. Louis by Wednesday. Then the US is to release its ADP non-farm payrolls for September, along with ECB head Mario Draghi to speak in Frankfurt. Then the ECB is to publish the minutes of its latest meeting. And then we have a string of US reports, including figures of jobless claims, trade and factory orders. And to wrap the week up, we have the important data of the non-farm payrolls. And the market will be keeping a very close watch to this. The beauty for the fact is that they are still looking to hike in December, as long as inflation can increase slightly at present. Well, the dollar yen case, surprisingly enough, is still holding towards the 113 challenge, even though we have seen 3 failed attempts there. Currently at the moment, I expect to see a pullback, and I am a little bit cautious of any bullish calls above 113, because we can easily see a pullback to 112.25 or even down towards 111.60, which is my preferred view, and to still play the strategy outlook of buying on dips, with the technical indications also supporting this view. Is likely to see any fresh challenges above 113 to fail once again. Well, the British pound has posted considerable losses over the last few days and now reaches its objective of 132.60. Later today, we have the UK construction PMI, which is forecasted at 51.2%, or point should I say, along with the Bank of England to release the minutes of the quarterly financial policy meeting. Now, do be a little bit cautious. Although I am bearish, the market could easily rattle from the Bank of England's comments of a hawkish move and could see a rise back up towards 133 to 134. At the moment, I am neutral now that we've reached my target of 132.60. So we'll have to see how it plays out in the next 24 hours. Well, the gold outlook still holds to a slight negative view, even though we are oversold. Now, I do expect to see a recovery from current levels and look back towards 78 to 83. However, a break beneath 68 will give some concerns that stops would be triggered, and we could see a fall down towards $12.58 and reassess from there. Well, the silver outlook is now currently holding to a bearish trend, as you can see here from this from the peak recently that we saw early September. At the moment, the market is showing some divergence, so we could see a rebound from 35 and look back up towards the downtrend of $16.8090. However, failing to get the divergence coming through, then we could see a fall towards 15. Now, anywhere from 35 to 15, I believe the buyers will start to increase and the bids may start firming up. So I'm not a bear down at that level, and I do expect to see a recovery very, very soon. Since the rejection from 52.8590, high being 94, oil has failed to regain any momentum, and now taking out the support of 50.80 overnight, I'm now looking towards 49.45.50 and reassess from there. Any advances should find a cap at $51.50 to 60 a barrel. So that wraps up my daily video. Thank you very much for joining me this morning, and I hope you have a wonderful day that's ahead of you.